Bank traders are concerned about missing out on the crypto party. Banks are concerned about cryptocurrency. Insider trading desks and a diverse clientele are pressuring large bank executives to launch cryptocurrency services. While compliance departments and boards of directors are less enthusiastic, there is an increasing desire to avoid being left behind. What to do and how to do it are not clear. The growth of businesses centered on Bitcoin and other digital assets can give dealers the impression that Wall Street executives are eager to examine the hackathon. Apart from the risk of dragging a good cryptocurrency name into the mud at some point, banks face significant obstacles in their digital efforts. They are unable to move quickly. You must adhere to regulations that are currently unclear or have not been implemented. Talent acquisition and retention are becoming increasingly difficult. And what if it turns out to be a massive con? Regardless of the risks, large banks can no longer dismiss digital coins. The market has increased in size to $1.8 trillion. The digital asset world is far too vast to ignore. We believe that crypto-based digital assets have the potential to create an entirely new asset class, Bank of America stated in the first cryptocurrency research report. The note makes this clear. While several major US banks have publicly stated their interest in or plans to enter the digital market, many European dealers have quietly followed suit. Some, such as Goldman Sachs, have chosen to make a splash with their cryptography efforts. Make a lot of noise about the baby's first steps. European banks are more persecuted, and as a result, communication is ambiguous. In February, a Commerzbank research team sent a note explaining why analysts do not cover Bitcoin. By September, the lender had established a team dedicated to digital assets. It's difficult to determine the traditional financial behemoth's place in the crypto world. Custody is a risky and extremely difficult to ensure process for preserving digital assets. It is a complex, highly technology-driven process for preserving digital assets. Banks can currently only buy and sell futures and other non-cash contracts, and transactions are similarly suspicious, making it difficult for banks to generate the returns generated by crypto-speaking trading companies. Rental is currently unavailable, and businesses engaged in the digital asset market are never fearful. Cryptography is expanding into the traditional financial services market, according to Kraken Bank CEO David Kinitsky. Companies native to crypto will outperform established businesses in this new medium, as was the case in other industries when the internet was introduced. Part of the issue is that everything associated with cryptography is associated with cutting-edge technology, which is in stark contrast to the type of kits typically associated with traditional financial advocates. Years of consolidation and mergers have left the banking giant's technology awkward, fragmented, and frequently esoteric. Banks are not technological advances, Diogo Monica, co-founder of banks and cryptocurrency technology provider Anchorage Digital, explained. Banks are no longer as cool as they once were, which means that talent is also a concern. Investment banks are seeking retired coders to manage complex and interconnected computer systems, as young people are no longer learning the language required to run some of Wall Street's largest institutions. According to recruiters, they are compelled to do so. Banks unquestionably have issues, a financial market expert recruiter said, adding that young coders are earning more and having more flexibility in companies focused on cryptocurrencies and technology. That I did. Additionally, the job is frequently more interesting. However, not all is lost. Their reputation and established customer base are valuable assets, even more so when more conservative investors such as insurance companies are involved. In the future, lending and borrowing may also be opened. And if their technology does not support it, banks can purchase it at any time, according to Christine Trent Parker, a partner in the financial industry group at law firm Reed Smith. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.